Happy Friday, traders. Greg here with market update. Okay, so this week the market has been purely focused on one thing. That's obviously what's been happening with the war between Israel and Iran in the Middle East. So all the big market moves have been based on this. So look, in the last few days, obviously the war has escalated. Iran has been successful. In bombing Israel, they've bombed some hospitals, they've bombed the stock exchange, and civilian areas. So the market, look, it has been trading risk off for the majority of the week on the back of what's been going on with this war, but it's been more of an orderly risk off. We haven't seen any real extreme market moves. And that's because the market is waiting to see whether or not the US will actually get involved in this war against Iran. And on that note, we actually did get some important news from the White House overnight, and that was that Trump now wants 2 weeks to decide whether or not the US will get involved, because he still believes in diplomacy and still thinks that there is a chance that he can get a deal with Iran. So that is a positive. So where have we got markets at the moment? I mean, they are opening in Asia risk bid on the back of the potential for diplomacy and Trump extending the 2 week deadline. Equity markets, as I said, S&P over the course of the week, it's probably it's come off like 100 points on the back of what's been transpiring. Again, not big moves, especially when you look at S&Ps coming off levels that are about 1 or 2% away from record highs. So even S&P down 100 points, it is still at very, very lofty levels. And I would suggest if we did get diplomacy and we did get peace and this war did come to a conclusion, I think those equities would rally quite hard and aggressively, and would probably see record highs very quickly. So let's see. On the currency markets, during the week, the US dollar has been bid. I've seen flows into that. US dollar is the ultimate safe haven, when we do have major geopolitical crises and events. But trading there has been pretty choppy, and again, no real big extreme moves. The market that has obviously had the biggest move and has been affected by this the most has been crude, which has rallied up highs around that $75, $76, but it has found resistance around those levels. It has gapped lower a little bit on the open today, just on the fact that diplomacy again looks like there's a possibility. And I'd suggest that risk basically trades off the back of what crude is doing. For whatever reason, if crude did break above that $76, $75 resistance level, did go up above $80, that certainly would would get a lot of risk off trading on the back of that, and equities would be a lot lower. And God help us if we did spike up to about $100, we'd get some very, very big extreme moves on the back of that. But at the moment, contained and touching it, and crude trading a touch lower. And yes, if it continues lower, then that's going to help risk. So if you are trading crude at the moment. Gold has been super interesting this week. After the initial gap open on Monday, and we saw those highs around that 34.50. Gold has traded just one way all week, and that is lower. And overnight we went as low as 33.50, so it's lost $100 from the highs of Monday. So a couple of things probably happening there. One is maybe the market has been saturated, long, and obviously we're seeing some of that weaker positioning getting taken out. But this other thing is maybe the gold market is the smartest market and has been trading this diplomacy and the fact that that looks like the likely outcome the whole time. And no doubt if we do get diplomacy, gold will drop even further. So at the moment, potentially bias is being short gold, but again, very fluid situation in markets and what's going on with this war. So you need to be super careful. Look, in other news besides the war, we have had a lot of central bank meetings. The Fed was obviously on Wednesday, and no change in rates. The Fed funds rate, that was expected. The dot plots that come out once a quarter, they came out, and the Fed did align the Fed members, their dots with market pricing of 2 rate cuts by the end of this year. So that was a positive for the market. But interestingly, 7 Fed members actually saw no rate cuts for the end of 2025. So certainly there are a few hawks in the Fed. The press conference was interesting in that Powell said a couple of things. One, that economic growth in the US was still good, the economy's still going well, labour market's still strong, solid, still doing well. So he's not worried about either of those. Inflation, no, he did say that he does expect that in the coming months to start rising marginally again, and that is his main concern. So yes, the bar is certainly set high for Fed to cut rates. And certainly if we do get in a situation where inflation does go up, potentially the Fed may not cut twice before the end of 2025. And then obviously on the back of that, towards the end of the year, we might get a very, much stronger US dollar greenback. Other central bank meeting overnight was the Swiss National Bank. They cut rates 25 basis points from 0.25% down to 0. They now have the lowest policy rate globally. And yes, if deflation continues, they may have to go back to negative rates. Normally, that is a massive sell Swiss story, sell the Swissy. But the Swiss franc has still been exceptionally strong, and that is on the back of it is a safe haven currency, and what's happened with the tariff uncertainty, trade wars, etc., and obviously what's happening with this war in the Middle East. But if we do start seeing some trade deals and maybe that the tariff situation, the uncertainty starts disappearing, and if we do get an end to the war, some diplomacy, we won't need that safe haven Swiss bid anymore. I think selling the Swissy could be an absolutely fantastic trade. With a policy rate of 0, potentially negative, the Swiss should get sold in a big way. So certainly that's a trade that I'd be watching out for further out. There was a Bank of England meeting overnight as well. They kept rates steady at 4.25%. That was expected. Unfortunately, the BOE still has inflation problems. They might even have a stagnation issue there as well. But because the rate, the fact that they didn't cut rates was expected. We didn't see any big market moves on the back of that or on the back of the S&B either. Anyway, coming into the end of the week, there is no big risk event or any big data that comes out. So the market going into the weekend is just going to be purely focused on headlines with respect to what is happening in the Middle East. Good luck. Have a great weekend. We'll catch back in with you next week.